Alrighty, folks. Thanks for hanging in there. We're about 3 minutes into the session already, but not really. Let me just see if I can get this camera working. Oh, there we go. One second. Not really that important to have the camera on, but just wanted to check in and say hello. So we've just released the branding update for the main AI system. Please watch that video on X, Telegram, Discord. We posted it everywhere. Super excited to hear your feedback, and of course, that's taking us closer and closer to releasing the actual AI for the community. We're testing it in-house right now, and super excited to just roll it all out. It's very complicated. There's a lot of moving pieces, so everything is coming together as the days go on, and really looking forward to getting this in your hands. So one step at a time, and with perseverance and endurance, we are actually just moving forward and moving forward, and that's what it's all about. So thanks for being a part of this and for tuning in with us every day. And yeah, I'm just going to pass over the mic to SPDas so we can get this session started and bring you that market narrative. And of course, our AI is listening and taking notes. It's watching and taking notes from day one and from 2016. We're super excited. Let's do this. SPDas, the trading floor is yours.
All right. Thank you, Igor, once again, and thank you as always, actually. And a very good morning and good evening to one and all who are joining from either the western or the eastern side of the globe. And we are now entering into 11th, 12th Tokyo Sydney overlap. And I think the price action has now started moving. We've started seeing something on the charts now, maybe after the noise or trigger yesterday the markets were waiting for. So as normally we would want to start with the Euro USD daily chart setup, and the larger degree trend is up. A neat little, of course, a multi-year corrective ABC 335, where wave B actually unfolded as a combination, the WXY, but but the nutshell is ABC is now complete. 13th of December, a bottom formed at 1.0177, which is the most important story or most important chapter of our story, I would say. And not only that, but we've also gotten a lower degree wave one and two. I think a couple of lower degrees waves one and two on the chart, and let's get down to that part of the story. Yeah. So here's that part of the story where we were referring to lower degree waves ones and twos. That is the first impulse wave one of a minute degree, wave two of a minute degree, and again wave one of a minute a, potential wave two of a minute a, again at 61.8%. So if what we are doing, if there is no triangle unfolding, I am not still ruling out the possibility of a triangle. Uh, but if there's no triangle unfolding, and if there's a series of ones and twos unfolding, believe it or not, we are setting up nicely for a super thrust wave in euro, and we're not closing all positions. We're just taking partial profits, closing one position, always active in the other one, and that's what I'm recommending here as well. Uh, Yesterday we were almost down to 1.03, right? Strong recommendations were issued, potential longs from those levels. Intraday, you can go ahead and take some profits, but if you've just entered, then it is strongly advisable that you don't close all your positions, maybe around 50 to 80%. Give it some more room for a pullback and re-enter, because this train, I mean this path is not coming back. I mean, I don't think the charts are telling us that prices are going to revisit these lows which have been potentially carved. Let me point out, we are not going to see these lows for a long time. 1.0177, 1.0212. Probably we are not going to see 1.0270 as well, uh, unless the corrective decline is taking a very complex shape of double zigzag or a triple zigzag, and it still wants to kill some time as we appear almost the mid of February. All right, but otherwise, please hold on to your longs. It's looking well poised towards 750 going forward. And let's do the trend line as well. I think one of the channel lines which we were referring to yesterday have been tested or it has been broken. Let's see. All right, it's being tested right now. So there is a possibility of a bit pullback, or if it is a lower degree wave four, I think it's going to break up higher soon enough, and that's the reason why we say that don't please exit all your longs. At least be in the game partially. Keep This is a good strategy. You can keep booking small profits, partial profits. See, this is the best way to do. Let's say your capacity to trade, or your lot size that you trade is, let's say, a micro lot, that is zero point 0.1, or or your capacity is two micro lots. Then you take one micro lot, you take two micro lots, but then keep one open all the time. let's say you open two micro lots or two mini lots here, then keep one open all the time and keep taking or churning profits in the other one. Let's say you've got 75 points, close one position, say thank you very much. When it pulls back, again enter, and we are meeting almost three times a day. We'll catch up with like the one we caught up here around 1.03. We'll catch up again when the right time is there. All right, and you can always watch the portal as well, where all the updates are being sent. All right, so keep one position all the time open to grab the entire profits, but also keep churning. That's actually what's going to add up to your profits. Actually, it's the bonuses, small bonuses, okay, because the retracements are being taken into account over there. So it really adds up. All right. Okay, so that's the story for euro at this moment in time. Longs are active. Stop loss at 1.0150 or maybe 1.02 with potential targets around 1.0750. All right, so let's pick up the next one. Mostly all the times we'll have four stories to touch base because we've got trading interest there. And then we'll touch base with possible coins. So the dollar index has reversed neatly from where we were expecting it to do, somewhere around 108, 30, 40 zone. So if this is wave two, like okay, let me bring up the daily chart first for the larger picture. So the larger picture goes without saying. We've been tracking this right from the day one. Uh, we started around the 2nd or 3rd of Jan. It's an impulse lower, that is five waves of the large degree, and followed by an A, B, C corrective wave retraced almost around the Fibonacci 61.8%. So it's a larger degree wave one of one larger degree, or wave A of one larger degree. And here we have wave two or wave B of a similar degree. What it means is that we are going to see wave 3 or wave C of a larger degree unfolding lower. So simply put, in a layman term, we are going to explore, or we're going to ideally carve five waves lower from here. Maybe we've got wave 1s and 2s already, wave 3, 4 and 5. So five waves lower, which is going to drag prices all the way through the 99, possibly even lower. A minimum cut should be a 99 for the pattern to complete. All right, that's the larger degree, and the action is somewhere here. We need to go to the hourly chart now. So now we got lower degree waves, ones and twos, and again one and two being carved out, unless unless uh, we unless it is still wanting to touch base with 10 or revisit 108 60 70, which is reasonably I mean, it cannot be ruled out. I mean, I really like to see prices bouncing off the 61.8%. That is, it's a magnetic ratio actually. It works everywhere. So trading point of view, yesterday if you took shorts around 40 45, you might want to take some partial profits if you want to. If you cannot, then just stay put, right? But be prepared. If you're taking partial profits, we are just giving ourselves a chance, just in case prices pull back to a higher level or a retracement of the current drop. we are giving ourselves a chance to get into the bus again. All right. As discussed in euro, if you're dealing with a couple of lots, and that's the way to go actually. If your capacity is one lot, break it to two 50-50, and then let 150% run all throughout the drop towards 105 or possibly 102 is 102 101, and on the other 50% keep churning, because if you are able to churn at least three times or four times in the entire drop, then that adds up as a good bonus to us. All right. Because nothing goes in a straight line. We all know that. It's always waves, and if we can catch those smaller waves, then I think it'd be good. All right. So ideally, the stop loss would go around 110.30, but you can place it around 109.85 as well. All right. So let's get to the next one. I think it's the biggest story which is unfolding now at the moment. Maybe not exactly in terms of price action it has confirmed, but it should be more or less confirming going forward. I want to bring the bigger picture first. So I think this is what we discussed in the previous session, New York session 2 yesterday, and we just want to revisit the larger degree counts first. Let me set up the screen correct for you. All right, I think this view is okay. So what we are what we are probably seeing right now is minor wave 3 was done around 2788, and then minor wave 4, there were chances for a potential triangle to complete like A, B, C, but that is not a triangle. I don't think so it is. The triangle was ruled out for wave 4, and ideally what is unfolding right now is an expanded flat structure. Remember, expanded flat, we've discussed this time and again. Wave A drops, wave B rallies above the initial point of wave A, and then wave C begins to cut loose on the south side, taking most of the traders by surprise. So where are we right now? We are just at the tip of. So if it is wave B of a minute degree, we are just at the tip of the turn here. It is just beginning to turn here. And if we can catch this turn, then we've got the entire drop, which is consisting of uh, the current price action is 29, and it's consisting of almost 400 pips, 400 points, and that is in terms of pips, 40,000 pips to be made. All right. So it's a big one for gold, uh, unless prices. So now with more conviction, as each hour is passing, we can say with more conviction that gold is done with the potential top around 2942. That was just around the Tokyo Sydney overlap yesterday, uh, just after the Tokyo Sydney overlap session yesterday. So till the time prices stay below the 42 mark, I think we are good enough. I'm bringing up the chart of candlestick patterns, and because yesterday what I saw, it was a doji, and I was expecting it to close as a doji. That's what it has done, and believe it or not, today it could either retrace the doji a bit around the 61.8% or continue dropping lower until the evening star is complete. So it's best to keep some positions on the short side active and not be completely out of the game, because at some point in time we don't want to see ourselves booking all profits and then missing the bus completely. We don't want to miss this bus actually. All right. So on the lower time scale, if I try and predict what is happening, that's a 15 minutes chart. So if this gentleman is digging sideways, producing a triangle, then we are going to see some more sideways activity. Possibly that this is wave one, wave two. That could be wave three. A triangle in place. A, B, C, possibly D and E. Now this is just a proposal. Okay, I'm not saying that this exactly could happen. But if it's a triangle in the making, then there might be one more leg lower or higher, sorry, and another one would actually go towards, I don't know, close to 2850. Let's find out with the help of Fibonacci. So if it closes down, if the triangle closes down seriously, somewhere in the vicinity of 2900, then 2860 would be the next target, immediate target for this to complete five waves lower. Well, we need to see an impulse lower. And if the impulse lower is already complete, because I saw a small wave two up there, which is not seen on, it's only seen on the 15 minutes time frame. If the impulse is complete, then the path will not be lower first. It's going to be higher first, and that price could be, assuming that that's the first impulse of a lower degree. We've got the 38.2% cut, and instead of dropping low from here, it goes higher to the 61 point. And I would really like to see this happen today at a personal level. I mean, it's the chart who's going to decide what is going to happen. But personally, I would like to love to see the price again towards 29.20, because that's going to give us a good opportunity, one of the best opportunities to get on the short side again. We've got our limits in place already. Partial shorts are active around 29.5. Remaining, we can go and short around 29.20, and that should be taken much lower. Should take us much lower going forward. All right. So that's the trade plan. Actually, we are on a 15 minutes time frame, and just wait for. Put your limit orders, please. Have your limit orders in place around the 10-20 zone, and activate shorts if price action reaches there. And again, since the partial shorts are already active, we can always say thank you very much if prices drop directly towards 2860. Book some partial profits there, have some more active, and then leave room for a pullback. So that's the trade strategy for gold going forward. All right. The recommended stop potentially is going to be around 29.55. All right, so this is a big story, and it would be really nice and wonderful to see how it's unfolding. There's another alternate count actually, if it's wave one, two, and one of two, and if the third wave is extending, we are seriously back in business on the south side. So let's let some time pass. Maybe when we are back in the London session or the New York session, we'll have more clarity and more to discuss about what the path is going to take forward. All right, and the next story now is a pound. Let's have a quick one there, and then we'll read the coin, Bitcoin. So pound has jumped off nicely from the swing lows yesterday, down the 2350. Correct? We caught that point right. We were right at that point. I think in the London Times yesterday. So it's still got room. It's just a wave four going on right now. So there's still room on the north side. Trading point of view, The upside remains 2,800. I think we've already taken the targets in the 4 hour. Yeah. So the upside remains around 2,800. If you are a positional trader and you don't like taking small profits, there's nothing to be done. But if you're wanting to keep churning, then take some partial profits right now. Keep some positions open. Leave it some room towards 2,800 and go forward from there. All right, that's a good way to go. But 2,800 and 3,000, 3,200 could be the next stories, the next potential targets for pound. Easy. Okay, let's see what the coin has done in the past few hours. This is this is exactly what what we were warning, and and the coin is it's not able to sustain. It's not able to sustain about that 98, 97 zone somehow. Come it comes back again and again and over again. So once again, no trade suggestion, no trade recommendation, either on the short side as well, or either on the short or long side. But one gentle warning: if you are holding longs, please have a tight stop just below that 91 mark. Okay. Uh, if you're staying flat as we are right now, it's okay. We are not asking you to take unwanted risk on the short side and go and sell right now. But be watchful of the path. I'm just cutting down the path now. Be watchful if this is unfolding. I mean, if there is an ending diagonal unfolding, then it will break below 91. Ideally, it should break below 91. All right, there is another possibility that is it's just doing a consolidated wave two of a lower degree before pushing it higher again. Eh, and if that is unfolding, then prices will stay above 91. So the stop loss for your long positions should always ideally be around 91. If you're sideways, it's good to remain sideways on a safer side. It's very aggressive on the short side though, so we are not recommending those aggressive shorts. But just be watchful in case prices drop below 91, then we might have something to begin our thinking process. It could be wave one, wave two, wave three around 91, wave four, and that activity could be a part of a diagonal which can complete the fifth wave somewhere within the vicinity of 89 or 91. When we have the five wave or the motive structure ready, we can start planning for the way forward. All right, and it's nothing wrong in being in the sideways or sidelines for a few more sessions, unless until we have further clarification on the price action on the waves again. All right, we'll touch base in the indices when we come back in the London or the New York, as always. And let's bring the current one to a pause again. And thank you once again for being here. And we'll come back in a few hours to continue the stories in the London Times. Right now, I'll be more than happy to hand it over to Igor. Igor, back to you, brother. Thank you so much.
Chef Priyadas, always a pleasure. Thank you so much as well.
Th- Thank you.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com. ForexLens gives you the edge.